Assalamualaikum warahmatullahi wabarakatuh. Good morning, sir. First of all, I would like to introduce myself to all of you here. I am Farah Ardelia Andresia. My student ID is 18104266418. I am from class D. I take accounting English from Mr. Adi Mursalin. In this opportunity, I would like to answer the question given by my lecturer, Mr. Adi Mursalin. The question consists of three parts, namely part A, which is related to the accounting theory and its practice, part B, which is related to video of accounting, and part C, which is related to accounting article. Well, I start to answer the question in part A. Number 1. What is accounting? Write the definition of accounting to 5 experts. Definition of American Institute of Certified Public Accountants. Accounting is the art of identifying, recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and events which are in part at least of a financial character and interpreting the result thereof. Definition of Warren Reef. Accounting is an information system that provides reports to stakeholders about the economic activities and condition of a business. Definition of Donald Kieso. Accounting may be best defined as identification, measurement, and communication of financial information about economic entities to interested persons. Definition of Arnold. Accounting is a system that provides information to anyone who must make a decision and control the implementation of this decision. Definition of Abu Bakar and Wibowo. Accounting is an information system that recognizes and reports financial transactions, the present and financial statements. Number 2. What is accounting cycle? And explain in details the cycle or stage of accounting cycle. What is accounting cycle? The accounting cycle is the holistic process of recording and producing all financial transactions of a company from when the transaction occurs to its representation on the financial statements to closing the accounts. Stage of accounting cycle. 1. Transaction. Financial transactions start the purchase. If there are no financial transactions, there would be nothing to keep track of. 2. Journal entries. With the transaction set is pledged, the next step is to record these entries in the company's journal is the chronological order. 3. Posting to the general ledger or GL. The journal entries are then posted to the general ledger where a summary of all transactions to individual accounts can be sent. 4. Trial balance. At the end of the accounting period, which may be quarterly, monthly, or yearly depending on the company, a total balance is calculated for the accounts. 5. Worksheet. When the debits and credits on the trial balance don't match, the bookkeeper must look for errors and make corrective adjustments that are tracked on the worksheet. 6. Adjusting entries. At the end of the company accounting period, adjusting entries must be posted to account for actuals and deferrals. 7. Financial statements. The balance sheet, income statement, and cash flow statement can be prepared using the correct balance. 8. Closing. The revenue and expense accounts are closed and zero out for the next accounting cycle. Number 3. Mention the accounting equation and explain the components of accounting equation. The basic accounting equation is also called the balance sheet equation. It's the relationship between assets, liabilities, and equity of the owner of a business. Basic accounting equation is the basic for bookkeeping in pairs. The basic equation component includes assets equal liabilities plus equity means assets are research owned by the company and its economic benefits for the future. Mean liabilities is an obligation that must be repaid by the company from the consequence of past transaction. Equity is the residual value of assets owned by the company after deducting liabilities. Number 4. What is account and why are the use of accounts in accounting equation? An account is a record in the general ledger that is used to start and store transactions. For example, companies will have a cash account in which to record every transaction that increases or decreases. The company cash another account, sellers will collect all of the amounts from the set of merchandise. Most accounting systems require that every transaction will affect 2 or more accounts. For example, a cash sale will increase the cash account and will increase the seller's account. Number 5. What is the purpose of accounting? The purpose of accounting is to accumulate and report on financial information about the performance, financial position, and cash flows of a business. This information is then used to raise decisions about how to manage the business, or invest in it, or lend money to it. This information is accumulated in accounting record with accounting transactions, which are recorded either through such standardized business transactions as customer invoicing or supplier invoicing, or through more specialized transactions known as journal entries. Number 6. What are asset liabilities and owner equity? Assets are resources that are controlled by the company as a result of past events and where the future economic benefits are expected to be obtained by the company. Liabilities are current corporable liabilities arising from past events. Their completion is expected to result in an outflow of company resources containing economic benefits. Owner equity is a residual right to a company asset after dedicating all liabilities. Number 7. What is business transaction? A business transaction is an activity or event that can be measured in terms of money and which affects the financial position of operation of the business entity. Number 8. What are revenue, expense, and withdrawals? Definition of revenue is a statement relating to money or finance from the overall result of the main business product or service performed by the company in period. Expense is a deduction from income that will generate net income before tax in the income statement. Withdrawal, namely deposits, is withdrawal of funds and deposits in the bank using checks, money orders, or withdrawal slips. Usually, withdrawal of deposits that have not yet matured and will be subject to a penalty. Collateral, withdrawal of collateral for a loan by providing no collateral. Number 9. Explain the steps for analyzing the business transaction. The steps in purchasing business transaction are 1. Analyze and record process such as research, documents, accounts, and analyzing and purchasing transactions such as ledgers, accounting for double entries, journaling, and posting in illustration. Number 10. Mention 6 business transactions happening in a company and their business transaction analysis. The owner, Mr. Andre, invested either in cash and either in equipment. Cash increases either 20 million rupiah. Equipment increases EDR 15 million rupiah. And equities decreases 35 million rupiah. 2. Purchase equipment 4,500,000. Paid in cash of 2 million rupiah. Reserve approved credit. Purchase equipment increases 4,500,000 rupiah. Cash decreases 2 million rupiah. Received decreases 2,500,000 rupiah. Completed consultant service of 80 million rupiah. Received in cash for the remaining in credit cash increases 3 million rupiah. Receivables increases 5 million rupiah and income decreases 80 million rupiah. The owner withdraw 1,500,000 in cash from the business for personal use. Price increase 1,500,000. Cash decrease 1,500,000. Pay rent amounting to 3 million rupiah. Rent expense increase 3 million rupiah. Cash decrease 1 million rupiah. Paid the following wage expense 400,000. Miscellaneous expense 100,000. Wage expense increase 400,000. Miscellaneous expense 100,000. Cash decreases 500,000. So number 11. Cash $1,000, account receivable $3,200, merchants inventory $850, land $10,000, account payable $1,530. Cash increases $3,928. Income decreases $3,928. Account payable increases $1,055. Cash decreases $1,055. Cash increases $3,700. Social capital decreases $3,700. Rent expense increase $1,200. Cash decreases $1,200. Account receivable increases $2,025. Income decreases $2,025. Store supplies increases $245. Cash decreases $245. Cash increases $3,000. Income decreases $3,000. Account receivable increases $1,635. Income decreases $1,635. Wages and salaries expense increases $850. Utility expense increases $325. Service expense increases $220. Other operating expense increases $65. Cash decreases 1,500. Supplies expense increases $865. Store supplies decreases $865. Prep increases $1,000. Cash decreases $1,000. Trial balance. Cash increases $7,680. Account receivable increases $6,860. Merchants inventory increases $805. Store supplies increases $620. Land increases $10,000. Income increases $10,588. Account payable increases $475. Social capital increases $13,520. Rent expense decreases $1,200. Service expense decreases $250. Wages and salaries expense decreases $850. Utility expense decreases $325. Other operating expense decreases $75. Price increases $1,000. Net profit income statement $7,888. Financial capital statement of change in capital 31 of July $6,630. Balance activa $25,638. Passiva $7,107. Part B. In this part, the questions are related to the accounting video. You must answer the question based on the following instruction. A. What is the title of the video? B. What is the speaker in the video you watch? C. What does the video tell you? D. Explain the context in detail the video you watch. A. What are the benefits for watching the video? Please open the following dates and watch them. Part B. In this part, the question are related to the accounting video. I will answer the question based on the following instruction. Number 1. A. What is the title of the video? The title of the video is Chapter 1 Principle of Accounting. B. Who is speaker in the video you watch? The speaker in the video I'm watch is Mark Christopherson. C. What does the video tell you? That video tell about principle of accounting. D. Explain the contents in details of the video you watch. First, the purpose of accounting among others, identify, record, and communicate the economic events of the organization to interested users. 3 activities in accounting. Three activities in accounting. 1. The trick is identification. First, we do identification. After that, we can enter to recording, classify, and summarize the prepare accounting reports by communication with analysis and interpret for users. The accounting process includes the bookkeeping function. There are two broad groups: user of financial information, among other internal user and external users. In internal users, there are management, human research, finance, and marketing. In external users, there are EREs, investor, labor unions, creditor, SEC, and customer. Ethics in financial reporting, standards of conduct by which one's action and judged as right or wrong, honest or dishonest, fair or not fair, are ethics Recent financial scams include Enron.com, HealthSouth, IG, and others. Congress passed Sarbanes-Oxley Act of effective financial reporting depends on sound ethical behavior. There is reputation. Ethics are the standard of conduct by which one's actions are judged as a right or wrong, be honest or dishonest, C fire or not fire, D all the test option. The answer is D all of this option. The chapter 1 to 7. Various user net financial information, financial statement, balance sheet, income statement, statement of the owner equity, statement of cash flows, not disclosure, generally accepted accounting principle. The accounting provision has attempted to develop a set of standards that are generally accepted and universally practiced. Chapter 1 to 8. There are organizations involved in standard setting, which one is search and action communication. Cost principle atau historical. This states that company record assets at their cost. Monetary unit assumption include in accounting record only transaction data that can be expressed in terms of money. Economic entity assumption requires that activity of the entity be kept separate and distinct from the activity of its owner and all other economic entities. Form of business ownership are proprietorship, partnership, and corporation. The basic accounting equation: assets equal liabilities plus owner equity. There are two variants on basic accounting equation. Among other, assets mean liabilities equal owner equity. Allowed asset means owner equity equal liabilities. Using the basic accounting equation, transactions are a business economy event recorded by the accountants, might be external or internal. Not all activities represent transaction. Each transaction has a dual effect on the accounting equation. Company prepare for financial statement from the summarized accounting data: income statement, owner equity statement, balance sheet, statement of cash flows, and less of that duration video tell accounting career opportunities, public accounting career in auditing and taxation serving the general public. Private accounting careers in industry working in cost accounting, budgeting, accounting information system, and taxation. Opportunities in government careers with the ERS, the FBE, the SHE, and in public colleges and universities. Forensic accounting careers with increases company and law of which the conducts investigation into theft and fraud. A. What are the benefits for your watching the video? That benefits for me are knowing the purpose, principle, and career opportunities in accounting. Number 2. A. What is the title of the video? The title of the video is Chapter 1 Review of Accounting Equation and How Transaction Affect the Equation. B. Who is the speaker in the video you watch? The speaker in the video I am watching is Mrs. Debris is H. C. What does the video tell you? That video tells basic accounting equation, review of accounting equation, and transition affect the equation. D. Explain the contents in details of the video you watch. First, the speaker say the basic accounting equation. The accounting equation is considered to be the foundation of the double entry accounting system. The accounting equation so on a company balance sheet whereby the total of all the company assets equal the sum of the company liabilities and shareholders equity. The formula for accounting equation is assets equal liabilities plus owner equity. How to calculate the accounting equation? The balance sheet holds the basic of the accounting equation. 1. Locate the company total asset. 1. The balance sheet for the period. 2. Total all liabilities, which should be a separate listing one on the balance sheet. 3. Locate total shareholders' equity and add the number to total liabilities. 4. Total asset will equal the sum of liabilities and total equity. The accounting equation helps to assess whether the business transactions carried on by the company are being accurately reflected in this book and accounts. Below are examples of items listed on the balance sheet. Assets. Assets include cash and cash equivalents or liquid assets, which may include treasury bills, certificates of deposit. Accounts receivable are the amount of money owed to the company by its customer for the sale of its product and service. Inventory is all considered an asset. Liabilities. Liabilities are what a company typical owner owes or needs to pay to keep the company running. Debts including long-term debt liabilities as well as rent, taxes, utilities, salaries, and wages, as well as defense payable. Shareholders' equity. Shareholders' equity is a company total asset minus its total liabilities. Shareholders' equity represents the amount of money that would be returned to shareholders if all of the assets were liquid and all of the company debts was paid off. Retained earnings are part of shareholders' equity and are equal to the per take on of net earnings that were not paid to shareholders as dividends. Think of retained earnings as savings since it represents a cumulative total of profits that have been saved and put aside or retained for future use. The video provides example of transactions that affect the accounting equation. A. What are the benefits for you watching the video? The benefit for me is knowing what is accounting equation, knowing transaction affect the accounting equation, and also know how to calculate the accounting equation. Number 3. A. What is the title of the video? The title of the video is How to Do a Balance Sheet. B. Who is the speaker in this video you watch? The speaker in the video I am watch is Superfect CPA. C. What does the video tell you? That video tells about balance sheet. D. Explain the contents in details of the video watch. The video tells the balance sheet of a scammer company on December 31. Part 1 of 4. Setting up your balance sheet. 1. Use the basic accounting equation to make a balance sheet. This is asset equal liabilities plus owner equity. Choose a balance sheet. Has 3 sections. Assets, which are the research owed. Liabilities, which are the company debts, and owner equity, which is contribution by shareholders and the company earnings. The information needed to complete a balance sheet can be found on the company general ledger, where all financial transactions for a particular period will have been recorded. In a balance sheet, the total sum of assets must equal the sum of liabilities and owner equity. The asset accounts represent all the goods and research that a company owns. The liability portion represents all of its debts. The equity portion represents contribution by owner, shareholders, and past earning. Theoretically, all the assets of the company are either financed by borrowing, which is associated with the liability accounts, or are financed by past earning and contribution from owners, which are associated with equity. Choose the debt for the balance sheet. The balance sheet is created to show the asset. liabilities, and equity of a company on a specific day of the year. Usually, companies prepare on a fiscal balance sheet quarterly or the last day of March, June, September, and December, for example, and at the end of their fiscal year, or such as December 31. But it can be done at any time. You might not finish putting together the balance sheet until several weeks after the end of the fiscal year, or date 31, for example. But your data collection and balance sheet that would still be December 31. 3. Prepare the header of the balance sheet. Use the title balance sheet. At the top of the page beneath it lists the name of the organization and the effective date of the balance sheet, or the last day of the quarter or fiscal year. Part 2 of 4. Preparing the asset section. 1. List all current assets. Current assets are assets that can turn into cash within 1 year of the balance date. They are listed in order of relative liquidity. In other words, how easily they could be converted into cash. Common current asset amounts include cash, marketable securities, or such as stocks, bonds, etc. Account receivable, supplies, inventory, and prepared expense, or such as prepared increases, prepared rent, etc. Include a subtotal of the current asset accounts and call it total current assets. 2. List all non-current assets, also known as long-term assets. Non-current assets are defined as a company value of property, plant, and equipment that can be used for more than 1 year. Minus depreciation. The general ledger will indicate the current value of long-term assets. 3. Include any intangible assets that are also considered non-current. Intangible assets refer to non-monetary assets that have no physical substance and will last more than 1 year. This includes patents, copyright, trademarks, and other rights. Non-tangible assets will have a value in the general ledger to establish cost. 4. Add up the current and non-current asset total and liabilities amounts total asset. Here check that the total asset per your balance are equal to the total asset from the company general ledger. Part of 3 of 4. Preparing the liabilities section. 1. Determine current liabilities. 2. Calculate all long-term liabilities, also known as fixed liabilities. 3. Add the current liabilities subtotal to the long-term liabilities subtotal. Part 4 of 4. Calculating owner equity and totals. 1. Calculate retained earnings. 2. Calculate the owner equity. 3. Add the total liabilities and total owner's equity figures. You have to sure that 2 of the total is balanced. A. What are the benefits for you watching the video? The benefits for me is knowing that the balance sheet must be balanced. Number 4. A. What is the title of the video? The title of the video is Financial Accounting Income Statement. Who is speaker in the video you watch? The speaker in the video I'm watching is Mursalin. C. What does the video tell you? The video tells about income statement. D. Explain the contents in details of the video watch. Income statement is a company financial statement that indicates how the revenue is transformed into the net income. The income statement can be prepared in one of 2 methods: the single stage income stage takes simpler approach totaling revenue and subtracting expense to find the bottom line. The more complex multi-step income statement. In addition to the single and multi-step method, the income statement can be reported on a cash or accrual basis. An income statement reported on a cash basis is typically used by smaller business that reckon transaction based on the exchange of cash. Income statement should help investors and creditors determine the past financial performance of the enterprise, predict future performance, and assess the capability of the business to generate future revenue streams through the reporting of income and expense. 8. What are the benefits for you watching the video? The benefit for me is I know how to calculate income statement. Number 5. What is the title of the video? The title of the video is Introduction to Accounting 1. B. Who is the speaker in the video you watch? The speaker in the video I watch is Kimberly June. C. What does the video tell you? That video tells about an intuitive approach to accounting. D. Explain the content in details of the video you watch. Fourth, an intuitive approach. What is accounting? Accounting is the language of business. Where does business need communicate? Where does accounting exist? What kind of decision of accounting help people make? All depends. There are 3 types of accounting, including tax accounting, management accounting, and financial accounting. Tax accounting. Most people think of tax when they think of accountants. Tax accounting helps determine how much is owed to the government for taxes. Tax is a small part of accounting. Management accounting is designed to help people in business make decisions. Financial accounting designed to help people outside the business make decisions. Accounting brings it together in the language of business, including people and the process of capturing, summarizing, and reporting information about a business. Help people make decisions, including the main areas of the 3 types of accounting above. What is accounting goal? People who understand accounting understand business and help those to make better decisions and more information. Accounting rules the world. 8. What are the benefits for your watching the video? The benefits for me is knowing intuitive approach. Part C. Open this link containing an article of accounting. Your duty is to read the article and answer the question that follows and you must video record your reading and answer. Answer the question related to the article, the link. 1. Why is accounting a great course to study? Accounting is a great course to study for a number of reasons. Accounting provides you with skill and knowledge that can be applied to a number of industries. In fact, so long as there are business in the world, accounts will always be needed. 2. What do accountants do? There are many qualifications and jobs that deal with money. So how exactly does accounting differ from other types of finance-related roles? Perhaps the easiest way to describe it is that accounting involves dealing with real revenue, actual transaction, and observable finance. 3. What is accountancy? A good foundation. Even if you did want to branch out into finance and economic background, in accounting lays the valuable groundwork for developing broader monetary theories. Accountants can hone their craft through the application of new methodologies. Number 4. What is must you have when you want to study accounting? When studying accounting, you will acquire knowledge about the laws that govern business. Typical business administration schemes, the ethics of accountancy, statistics, and accounting theory. You'll be taught how to prepare the key documents that your job involves, including business proposals, financial statement, and tax returns. Number 5. Is accounting right or wrong for you? Accounting could be right up your alley. However, if you lack role that is constantly shifting and requires more speculation and risk taking. You may be to try other financial roles. 6. Are you sure that accounting will help you in the future? You can really go wrong with a diploma of accounting. Even if you decide to switch careers later, you'll have a great foundational understanding of how money is recorded and reported that will only help you in the long term. At the very least, you know how to manage your own finance better. 7. Why does accounting have a good prospect of job in the future? Jobs in accounting are always in demand, and the skill you learn through studying are transferable and can be applied to many other disciplines. Okay, thank you, sir.